Hello there. Welcome back to Grade 10 Accounting. We are still working on question papers. This is the question paper that we have for KwaZulu-Natal province. It is for Grade 10. We move down. Question paper. It reads Accounting, March 2022, which is the common test that we are having here. Maybe you want to access it on the internet. You can go to testpapers.co.za to access this question paper. So we can as well go and look at the question that we are going to look at today. We are going to look at a question on question 4, and this question is on basic concepts, problem solving, internal control, and ethics. This is the topic that we have in terms of this question. And let's take note of the marks. We have got 20 marks that are there on this question, and we are expected to spend on average about 18 minutes on this question. So this is what we have. But then we can go through the question. The question reads: Mseshi Skaba runs a business that sells school tracksuits in 3 high schools in Burundi. There are 3 different salespersons in each school, namely Mbuyazi, Umede, and Mashaba. He is concerned about control over these tracksuits. Then on the third part, we're given 4.1, and it reads: match the accounting concepts in column A with examples in column B. Write only letter to the present numbers, that is 4.1.1 up to 4.1.5 in the answer. So we are given a column A and we are given column B. This is information that we are having. So basically what we are going to do is we are going to try to find out which explanation match these concepts that we are given here, or these principles that we are given in the first column, and then we're just going to put the letter like A. We put A. If it's appropriate for 4.1.1, we just say 4.1.1, then we say A. So this is what we have. Let's look at the first one: business entity rule. We can call it a business entity concept. We can call it a business entity principle. Still the same, it means the same. So this is what we have. So on business entity rule or concept or principle, it explains that basically it requires each business to be treated separately from its owners for accounting purposes. So there's a separation that should be there between the owner and the business in terms of the activities that are happening there. Mainly, we are concerned with the transactions that the owner does should be separated from the transactions that the business does. So it also entails that personal activities of the owners are kept separate from the business transaction and excluded from the financial statement. So you are going to see that all the transactions of the owner of the business should be separated from the transaction of business, separated from transaction of the owner. So that's why we are having adjustments always when the owner takes the resources of the business for personal use. We regard them as drawings. We are trying to put a line between the 2 parties. So this is what we have. So according to the responses that we are having, we go and we check in the column B the most appropriate explanation that we are having there that is matching this business entity rule. You see that B actually explains what we have in terms of business entity rule, and it says an owner owes his sister 2,000 rands for costs incurred on holiday. This is not recorded in the business books. This was not recorded. This 2,000 we are having, it was not recorded. Why was it not recorded? It was not recorded because it's not a business transaction. It's a transaction of the owner. So we have a line that is there between the owner and the business. So we do not have to record that 2,000. So this is what we have in terms of the first one. Then we go to the second one. The second one is the historical costs. The historical costs, it's a principle also, and it can come in the form of a rule. It explains that you see that it states that a company or a business must account for and record all assets at the original cost or purchase price in the balance sheet. So mainly, it concentrates on the assets, valuation of assets, that it should be valued at cost. We do not have to value the assets at their realizable value. We mean at the market price, but we record them at the cost price at which we the price at which we purchased them. That is the cost price. So that's what the historical cost principle, and we have to take note that its main concentration is on assets. So this is what we evaluation of assets. So this is what we have. So if you go to the pool of responses that we are given there, you would see that we go to, if we go down there to the response that we have for E, is the one that is mainly matching this one for historical concepts. And it reads, land and buildings are shown in the financial statement is 5 million, even though the property is now worth 16 million. So what does it mean? It means this 5 million that we are given is the cost price. So this is the one that should be recorded in the books of accounts. And then this 12 million is the market price. This is the price that if we sell this land and buildings today, it's worth 12 million, but the cost is 5 million at which we purchased that the land and buildings. So this is what we have in terms of historical cost, which is 1.1.2. Then the next one is the going concern. So the going concern actually basically explains that the business is going to operate for the foreseeable future. We don't expect that the business can be going to stop operating in the near future. This is what we have in terms of the going concern. It explains that a business functions without a threat of liquidation for the future, which is usually regarded in the as the next 12 months. So the future that we are saying is going to operate and it's not going to stop operating, it's usually estimated to be the next or the following 12 months. That's the future that we are talking about. And we say it's a business, as a business functions without a threat of liquidation. Liquidation is when the business is short of funds and is going to stop operating. The business facing financial problems, financial crisis, then the business stops operating. So that is what we call liquidation. So this is what we have in terms of the going concern. So you see that from explanations that we are given there on the going concern, if we go to the explanation of D, it matches this going concern that financial statements reflecting that the business will survive in the near future. This is D. So we are having D there is the most appropriate. So what we are saying is for business entity. For business entity, we have got our B, then we have got our historical cost, we have got our E here, and then if you go to going concern, this is where we are. Number 3, we have got our D. So we are now on the matching principle. So we need to understand again what we mean by the matching principle. But the basic principle basically is the concept of matching expenses and revenue, and be it income in the same financial period. What belongs to this year should be recorded this year, and what doesn't belong to this year should not be recorded this year. That's why we have those adjustments that we make for accruals and prepayments. That accrual we are saying maybe for example, if an expense for this year which was not paid, we've got an amount of an expense that was not paid this year, but it belongs this year, we should record it this year. That's why we add accrual saying although it wasn't paid, we need to add it there so that we have the actual figure which belongs to this year. And then for prepayments, we are saying what belongs to next year was paid this year. So but it doesn't belong to this year, so we remove it. That's why we subtract those prepayments. So that's what we have in terms of the matching principle. It says that businesses report expenses at the same time as the revenue they are related to. So this is what we have. And also revenue and expenses are matched in the income statement for a period of time, e.g. it might be a year, it might be a quarter of a year or a month. This is what we have in terms of matching principle. So if you see in the selection that we are given there, in terms of the matching principle, you see that C is the most appropriate. In every sale transaction, sales are matched with cost of sales to realize profit. So C here, this is what we have in terms of 4. We have got C. Then we go to D. We have got prudence. Prudence concept, but prudence concept basically explains that we do not have to overstate our profits. We do not have to overstate our profits. So basically, it says do not overstate the amount of the amount. Do not overstate the amount of revenue recognized or underestimate the amount of expenses. So we do not also have to underestimate the amount of expenses. So it emphasizes on conservatism. That is, we should not overstate our profits. One should be conservative in recording the amounts of assets and not underestimate liabilities. And also, it also goes on to emphasize that revenue is recorded when it is certain that we are going to receive that revenue. When it's uncertain that we are going to receive the revenue, we should not record it. And then expenses are recorded when it is probable. When we see that we are going to incur expense, when it's probable that we will incur an expense, we can record that expense. So that's why we adjust for bad debts. For bad debts, we are saying this we might incur expense that this debtor might not pay, then we write it off. So we are trying to abide by the prudence principle. So this is what we have in terms of prudence. That's 4.1.5, and we'll see that the most appropriate that we have there is D. So let's say, sorry, it's A. If you come to A, it reads damages payable to a client will be finalized next year. An estimated amount of 4,000 is recorded this year. This is what we have in terms of this. For 4.1.5 for prudence, we are having our A here. So this is what we have. So then we can go on to the next question that is beneath that. And the question is reading, Sesh Kaba is experiencing a different problem concerning each of these salespersons. First point, state a defined problem for each salesperson or school. And then the second one saying, give a suitable solution to each problem. So this is what we have in terms of this one. So we need to state the problem that we are identifying there, and then we give a solution to that problem for each and every column that you are having there for Sosama, Babanani, and then Intonga in the last one. So this is what we have. So we can give a hint in terms of what exactly key points that we should check when we are looking for these problems. We have our main key points that we have to go through to check on each and every column. Key points that we should take note of. We should take note of missing items of it are missing. Here we've got Trexus, so take note of if there are any missing Trexus there. Let's just say missing units, and then this is going to be the first one. Then the second key point that we should take note, try to identify any cash missing. So we are going to go through how do we do that. Then thirdly, try to find the level of closing stock. Remember, if the closing stock is too high, it means it's a problem. For example, here for the third one, that one is a very easy one that you can just notice. If you look at the in this row, it's written number of items unsold at the end of the month. We are having yet 25 Trexus, 96, 110 Trexus. So you see that in this column, in this column of Intonga Mashaba, we've got Trexus of 110 that are there, which are unsold. So it means it's a problem. We've got a lot of Trexus that are unsold. So this is the level of closing stock that I am trying to emphasize that. So we are clearly seeing that for this last column for Mashaba, we are having a problem of a high level of closing stock. This is a problem that is obviously there. So we are going to start by this first column and try to see which problem is there. Like we are saying, let's check for those three. Here we are saying now the first one is missing units. Let's try to see missing units. Missing units for this one. If we have got any units that are missing, then it becomes a problem. So let's try to see. So we say this number of units are available to be sold. Then we subtract the number of items sold, 225, subtract from 250. Then we can see what is remaining at the end of the day. So we say 250. This one, then we subtract 225. We are trying to see if there are any units that are missing. If you subtract the 2, you are going to get 25. you see this 25 is the same as the 25 that we are having there. So it means there's no problem about units missing. Then we go to cash missing, this second one. If there are any cash, if we have any cash that is missing, then let's try to see if we have that problem there. So on cash missing, we are told that for this one, we have a number of items sold at $2. So they are sold at $2 here. Sorry, at 2 rands here. We have got 2 rands here. So having these 2 rands, and we have got 225 tracksuits that were sold. So what are we going to do? We are going to say now to see the total amount that should be received there. We are now saying 225 times 200 rands. 225 times 200 rands. You'd see that the amount that you are supposed to get there, if you say this one times this one, you are going to get 45,000. So you see now this figure is the one that should be received. So if you compare this figure with this figure, you'd see that this one is greater. It means they received lesser, which means there's cash that is missing there. Cash is missing. So this is a problem that we have identified. So we can just go and state it in the in our answer section. This is our answer section. So remember here we got our B, and here we got our E, and then this one was D, and this one was C, and this one was A, according to what we identified there. So we can go to the second part now, where we identified that there's cash that is missing. Cash that is missing. We can just go there to find out the amount of the cash that is missing there. To find now the amount of cash missing, we are now saying this 45,000. Then we subtract this 35,000. Find the difference that is missing. Then we are going to get our 10,000. So this is the amount that is missing. So we can go there and state that one. So here we have we are saying 10,000 rands cash is missing. That's our problem. 10,000 rands cash is missing. So we have our problem there. Then advice, what advice can you give? What advice can we give there? The advice that we can give is that maybe these customers are coming with cash to pay, so we can encourage them to use electronic transfers, EFTs, electronic funds transfers. So encourage customers to use EFTs. In that sense, the risk of losing cash will be minimized, because this money is just going to be transferred. So this is what we have. So we can just give an advice that encourage use of EFTs. Encourage use of EFTs. This is what we can advise. So we can go again there and try to see what we have next in terms of next question. So we are here. We are now looking at the second one. So the second one is here, which is Gumede. We can just try to see how we can calculate that one. So we are going to go through all those 3 steps again, try to see if there is any units that are missing first. Then we check the cash missing. Then after that, finally, if you are not seeing any problem, we go to the last one, which is the level of closing stock. But basically, level of closing stock, we've seen that it's affecting this last column. So here, let's try to see the number of units. Number of units. Remember, number of units. We said we are going to say if the units that are available minus the units that are sold. Then we see what is remaining. So we are on this column. So we are going to say 450 is the units that are available. Then we subtract those ones that were sold. Then we see the remaining ones to compare with this figure. So 450 minus 350. If we say 450 minus 350, we are going to get 100 there. So here we have 100. So this figure, we compare it with this figure. So it means on practical on ground, we have got 100 units. So practical on ground, we have got 100 units, but the units that were supposed to be there are 110. The units that are supposed to be there, we have 110. So this is what we have there. So, sorry, we are in this column. This is a Gumede column. So what we are going to do is the units that are there practical on ground, so we are given there is 90 tracksuits, but they were supposed to be 100 here. So what are we going to do? We are going to say 100, then I will subtract 90 to get the units that are missing there, and then we get our 10 units is missing. So 10 tracksuits are missing there. We have got 10 tracksuits that are missing. So this is a problem. We've already identified the problem of the second column, which is Gumede. We have identified the second problem, which is Gumede there. So we can just go there and highlight this problem that there are 10 tracksuits that are missing. We go to the column of tracksuits, and we are saying here we've got 10 tracksuits missing. So what advice can you give in terms of when we have this situation that we have some units that are missing? We can increase the security, because the reason might be that these tracksuits are being stolen. So we can tighten security. E.g. putting some CCTVs. Putting CCTV can be a solution to that problem. So this is what we have in terms of the second one. In the last one, we have already identified the problem. We can go back to check there. We are seeing that we have got 110 tracksuits that are there. So this is a high level compared to other columns that we are having there. So this is the problem that we have. So we are going to raise that problem and try to find out what advice can we give there. So what we are saying now is we are saying 100 tracksuits, 110 tracksuits are unsold, which is too much stock on hand, which is too much stock on hand. Or we can just say too much stock on hand. This is what we have in terms of so how can we reduce this problem of having too much stock on hand? So we need our units to be sold quickly, so we can advertise our products. We can advertise our products. So basically here we can just say advertise more regularly, so that these tracksuits are sold quickly. So this is what we have in terms of this question, guys. We can stay tuned for more videos to come. Those who have subscribed, please subscribe and share. We'll meet again in the next video. With that, I am signing out.